In this episode, we talk about real estate and investing and why I think it's the best use for your money if you're going to invest. Welcome to episode 13 of 3 Things with Darin. I am Darin. And the 3 things that we're going to be talking about today are right behind me if you want a little cheat sheet, if you want to get ahead of me. But to lay the foundation, the framework here for it, a lot of people talk about why real estate investing isn't that great. There's lots of downside to it. By the way, if you would have talked to me 5 years ago, 6 years ago, really 6 years ago, I was having a tough time being a landlord. Real estate investing wasn't that enjoyable to me. It was my least favorite thing, and I've come back to it again because really there's just nothing better that I can see to do with your money. A lot of people say you got to put it in the stock market. You get 10%, 12% return. Show me where you're getting that. And if you're investing through someone, you're paying for their fees. You have to pay to have that invested. And the majority of mutual funds and stocks are not going to have that kind of return. Even if you're investing into the S&P 500, if you're just doing an index fund, you're going to get an 8% return, which is great. There's nothing wrong with the 8%. But look at it this way. 8% of whatever you're investing, let's say it's $10,000, you have 8% of $10,000. Or one of the things that we're going to be talking about, why I love real estate investing, and 3 things, the appreciation. Let's say you get a 4 to 5% return on a $300,000 to $400,000 property, even a $200,000 property. So take a look at those numbers. Do you want an 8% return on $10,000, or do you want a 4 to 5% return on $200,000 to $300,000? Simple math. I think you know which one makes more sense. Thing number 1. The reason why I love real estate investing, the cash flow. If you go invest into a stock, you might get some dividend returns or something like that. But if you buy your property right, you run the numbers correctly, you can account for any sort of expenditures, expenses that are going to come up, any malfunctions with, like if you have a dishwasher in your unit or a washer and dryer, things like that. You got to account for those expenses, absolutely. But if you run your numbers right, you have cash flow. So every month you could have money coming in. The way that we look at our investments is we save up for those through the cash flow. So sure, we're putting the money back in, but we're paying for it with that money. So we pay for the washer and dryer that needs to be replaced every few years through the cash flow. So that's the beauty of real estate investing. Do you get that in the stock? Do you have money coming in every single month? Or do you just see the stock price rising and you don't really get it until you cash out? Real estate investing, you can have cash flow every month if you do it right. Thing number 2, your debt pay down, or what I like to call your forced savings account. I've talked about this in another episode where I don't think we're not in a culture that is really all that great at saving money, whether it's saving up for a big purchase like a home or like a car or a boat or even a vacation. You know, how many people are really saving up for a vacation versus putting it on the credit card and then paying it down later? So a home or real estate investment, you have that forced savings account. You know you have to make that payment every single month. So you're paying down your principal. Sure, there's some interest. You had to borrow against it. So you're paying an interest fee on it. But you're paying your principal down, which is what I call a forced savings account, because some of us just aren't that good at saving money. Thing number 3 is the appreciation. So while you're holding on to that, the appreciation of the home could be going up. And I say could because over a long run, you know, if we look at it over the last 2 or 3 years, we're going to see appreciation. If we go back 5, 6, 7 years, we're going to see a downturn and then appreciation. You go back 30 years, you're going to see appreciation, downturn, appreciation, downturn, appreciation. So we have to look at it on a long enough scale. I'm like perfectly inside the camera. There we go. So perfectly inside there, the appreciation On a long enough timeline, you'll see ups and downs, but ultimately you're going to see an appreciation. Not a huge amount. You're not going to get like a 20% return. Over the last couple of years, certain parts of the country, you might, which I'm not a huge fan of that. I'd rather see a steady 4 to 5%. But that's the beauty about real estate, is not only are you having the cash flow, the debt pay down, that forced savings account, but then you're seeing appreciation. So you bought your home, your investment property at $300,000. 15 years later, that property is now worth $400,000, $500,000. And then this is a little bonus one that I didn't want to throw in on the three things, but just something to keep in mind as a real estate investment property. Something you want to maybe talk to your accountant about is the write-offs that you get, the tax deductions of doing the updates, the repairs, of buying the new appliance and doing the getting those tax deductions and the depreciation of those things. So that's just a bonus thing. Definitely not the reason why I would invest in real estate. If you're saying, hey, this is you get some tax deductions, so put your money over here. Not why I would do it, but it's really the cherry on top. So you have your ice cream, your chocolate, and your cherry on top of that. Not the reason why I would do it though. Thank you for watching another episode of Three Things with Darin. We're on to episode 13. I should say, sorry I haven't been here in a while, but the reason why I'm wearing Packers on a Wednesday as I record this episode, the drubbing that we gave to the Bears this Sunday. So I'm wearing Packer gear all week just because I'm that excited for it. But thank you for watching another episode of Three Things with Darin. If you have questions about buying, selling, or investing in real estate, or just how to get your money in order to get started with buying your first home or buying your first investment property, let's talk. You can email me questions at darinpersinger.com or find me on Twitter at Darin Persinger.